Imagine transforming your financial future with just $5 a day. It seems small, almost insignificant, right? But the truth is, this seemingly modest amount can snowball into wealth over time, provided you invest it consistently. The beauty of investing lies in compound interest, the eighth wonder of the world, according to Albert Einstein. In this video, we're going to show how this principle can be applied even with minimal daily contributions to create massive long-term gains. This video isn't about instant wealth or quick success. It's about patience, discipline, and the quiet, persistent power of small, consistent efforts. Whether you are a seasoned investor or someone just starting to think about financial planning, this video is designed to encourage you to understand that you don't need a huge sum to start. You just need consistency and time. The smallest seed, when watered and nurtured, grows into a mighty tree. The psychology of small beginnings. One of the biggest hurdles to saving and investing is thinking that you need a lot of money to start. This mindset is rooted in the misconception that only large amounts of money can create financial security or wealth. But here's the truth. It's the small, consistent investments that matter most over time. When you think about $5, it doesn't seem like much. You can easily spend that on coffee or a snack. But what if, instead of spending that $5 on something fleeting, you invested it in your future? Starting small is not a sign of weakness, it's a powerful psychological strategy. It removes the pressure of having to come up with a large lump sum, which can often deter people from even starting. By committing to a small daily amount, you're tricking your brain into building a habit of investing without feeling the financial strain. And soon, that habit becomes second nature. The magic of compound interest. Now let's dive into the heart of why small investments work. Compound interest. Compound interest is when the money you invest starts to earn returns, and then those returns begin to earn returns. It's the snowball effect. What starts as a small investment gradually gathers momentum and turns into a larger sum over time. Here's a simple example to illustrate. If you invest $5 a day, that's $150 per month. Over 1 year, that totals $1,800. Now, if you invest that $1,800 in an index fund or other diversified investment vehicle, with an average annual return of 7%, you won't just have $1,800 at the end of the year. You'll have a little more due to the interest. But here's where the magic happens. In year 2, your $1,800 isn't just growing by another 126, 7% of $1,800. The interest you earned in the first year also starts to earn interest. That's compounding. Let's look at the numbers over a more extended period. After 5 years of investing $5 a day, you'll have contributed $9,125, but with compounding at 7%, you'll have approximately $10,530. After 10 years, you'll have contributed $18,250, but compounding turns that into roughly $25,500. After 20 years, your contributions would total $36,500, but compounding can potentially grow it to about $78,000. By simply sticking to a daily investment of $5, you could have nearly $80,000 after 20 years, assuming a 7% annual return. That's the power of compounding. The growth becomes exponential the longer you stick with it. Why consistency beats timing the market. Many people think they need to time the market to be successful investors, buying at the perfect moment and selling at the highest point. This mindset is not only stressful but also impractical for most of us. Even seasoned investors struggle with perfect timing. That's why consistency beats market timing every time. Investing $5 a day removes the stress of trying to predict market movements. This approach is called dollar cost averaging, where you invest a fixed amount of money at regular intervals, regardless of the price of the investment. This strategy reduces the impact of market volatility because you're buying more shares when prices are low and fewer when prices are high. Over time, this smooths out the average price you pay for your investments and reduces the emotional roller coaster that comes with market swings. The key takeaway here is that time in the market is far more valuable than timing the market. By being consistent and investing every day, you give yourself a much better chance of accumulating wealth. Where to invest your $5 a day? You might be wondering where exactly you should put your $5 a day. While there's no one-size-fits-all answer, here are a few common and accessible investment options. Index funds. Index funds are a great choice for beginners. They track the performance of a market index like the S&P 500 and offer instant diversification. The S&P 500 has historically returned about 7 to 10% annually, making it a solid long-term investment. Exchange-traded funds, ETFs. Similar to index funds, ETFs are collections of stocks or bonds that you can buy and sell like individual stocks. They're generally low cost and provide broad exposure to various markets or sectors. Dividend-paying stocks. Some stocks pay dividends, which are regular cash payments to shareholders. Reinvesting these dividends allows your investment to grow even more through compounding. Robo-advisors. If you're unsure about which investments to choose, robo-advisors like Betterment or Wealthfront can help. These platforms automatically create and manage a diversified portfolio for you, based on your financial goals and risk tolerance. Savings and investment apps. Apps like Acorns or Stash make it incredibly easy to invest small amounts of money daily. They round up your purchases and invest the spare change, allowing you to start building wealth effortlessly, overcoming the "it's not enough" mindset. It's easy to dismiss $5 a day as insignificant. You might think that such a small amount won't really make a difference in the grand scheme of things. But here's the truth, it's not about the amount, it's about the habit. The habit of investing regularly is far more valuable than the initial amount you're able to invest. Why? Because as your income grows, so too can your daily investment. What starts as $5 a day can easily become $10, $20, or even $50 a day over time as you build your career or side hustle. The key is to build the habit early and stick with it. Remember, building wealth is a marathon, not a sprint. It's about the slow and steady accumulation of wealth, driven by the daily habit of investing. When you change your mindset from "it's not enough" to "this is just the beginning," you open the door to incredible financial possibilities. The power of patience. One of the most important aspects of investing is patience. You're not going to see dramatic results after a few months or even a few years. It's human nature to want instant gratification, but investing is the exact opposite. It's all about delayed gratification. By investing $5 a day, you're making a commitment to your future self. You're saying, "I believe in my future enough to sacrifice a small pleasure today." That's a powerful statement, and it's one that will pay off over time. The stock market will have ups and downs. There will be periods of slow growth, and there may even be times when your investments lose value. But by staying patient and continuing to invest, you give yourself the opportunity to benefit from the long-term growth of the market. Remember, it's time in the market, not timing the market, that leads to success. Turning small investments into big life goals. Investing $5 a day isn't just about accumulating money for the sake of it. It's about using that money to achieve your life goals. Whether your goal is to buy a house, travel the world, retire early, or simply have financial security, small investments can help you get there. Here's a powerful exercise to try. Think about what $78,000 could mean for your future. Could it be a down payment on a home, a comfortable retirement fund, the ability to travel without financial worries? When you attach your investments to meaningful life goals, you give yourself even more motivation to stick with your plan. Start today, no matter your age. It's never too late to start investing, but the sooner you start, the more time you have for your money to grow. If you're in your 20s or 30s, you have the incredible advantage of time on your side. Even if you're older, investing $5 a day can still make a difference. It just might mean adjusting your financial goals or investing strategy. The important thing is to start. The best time to plant a tree was 20 years ago. The second best time is today. Don't let the fear of starting too late or not having enough money keep you from taking action. The most important step is the first one, and once you take it, you're on the path to a brighter financial future. Conclusion: your future starts now. At the end of the day, the power of small investments lies not in the amount, but in the consistency, patience, and discipline required to see it through. Whether you start with $5 a day or $50 a week, the habit of investing regularly will transform your financial status.